please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Bharti Infratel is merging Indus Towers with itself. The board has approved the merger. It's the Bharti Airtel board.
Although India has some really fantastic companies, certainly on the valuation front, India hasn't been cheap.
Just south of 10,600, but only mildly down. And Sensex is down about 50.
The markets are absolutely quiet. Very little movement. I mean, we're down about 7 or 8 points on the Nifty.
We've entered four new categories. We've put in about 30 plus new products into the market.
Mindtree has managed about a 3%. So mid-cap IT continues to be very, very strong. The other theme that played out today was life insurance. Again, that's a result reaction that kind of stems out. So ICICI approved 4%.
Global weakness pulls Dalal Street into the red. Nifty gives up 10,600 mark, while the Sensex just about holds on to 34,500.
Bank Nifty slips close to 1% as the rupee weakens to a 14-month low. The 10-year US Treasury yield spikes 3% as well.
Tech stocks outperform the ID index, surges over 1% on a weak rupee. However, IT major Wipro reports a weak set of numbers after markets close. It misses street estimates for the fourth quarter.
No such problems for Bharti Airtel. The stock surges over 3% on healthy fourth quarter numbers. Bharti Infratel, however, remains subdued after the news of its merger with Indus Towers.
And the Mumbai Development Plan 2034 gets the green light. Over 2,430 hectares will be released for affordable housing. Realty stocks, Mumbai-based ones, see profit booking post the announcement. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you all about 8 hours of hectic trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Surabhi Upadhyay.
Hi Lata, good evening to you. Well, over the next 30-odd minutes, we will be discussing the top 5 market headlines, and our experts are going to be answering your stock-specific questions as well. Joining in to answer those queries today are market experts Dipan Mehta as well as technical expert Mitesh Thakkar. Thank you, gentlemen, for being with us on the show today. But before we get started, let's take a look at how the market fared in trade today. The views coming in there, Lata.
Well, I would think that there's been a global risk-off. 2 things we were confronted with. One, that US Treasury yields have gone to 3%. We last saw that in 2014. And if it goes to 3.04, that would be the first time since 2011. So the world is taking cognizance that the cost of money has increased. It's very close to a 4-year high and will soon be a 7-year high. As well, a strong dollar. Together, that led to a global risk-off. We saw it in Asian equities falling, European equities falling, and most EM currencies, emerging market currencies, as well as even developed currencies, fell versus the dollar. So for India itself, what that translated to was financials. Usually at a time when currencies weaken and there is a global risk-off, the first to get hit would be financials. Of course, oil marketing companies, because of a more expensive imported price of crude. It's not necessary that crude should rise today, but if the rupee became cheap, then anyway the landed price of crude becomes expensive. So you found all those, depending on imported raw material, getting into the red. The ones that benefited obviously were exporters, so IT stocks were the toast of the market. We also saw Mumbai realty stocks doing well after the announcement that the Mumbai redevelopment plan will probably give them more orders by way of affordable housing.
Oh, absolutely. So I'll just quickly run through the stock list for the day. As Lata pointed out, the fact that bonds were, the yields were rising and prices were falling, that had an impact on the entire banking universe. So a lot of your large cap banking names, ICICI, IndusInd, SBI, Axis Bank, a lot of these banks were down. The index itself was down. A couple of other heavyweights were also losing ground today. Stocks like ITC, L&T, they didn't do much to help the market on the upside. Reliance stayed more or less flat. IT was the one sector that continues to be in favor of the bulls, and once again with the rupee's weakness also being a tailwind. So whether you had the likes of TCS or Infosys or of course a lot of the mid-cap IT as well. I'll just come to that in a moment. Most of those stocks were up and about. Now on the mid-cap IT side of things, I mean, the kind of moves, 10% on an NIIT Tech, Zensar, Persistent, Hexaware, the names were really flying around. Beyond this, couple of important result reactions played out in the market today. So ICICI Prudential has the market very excited about how life insurance companies will fare in the fourth quarter. That stock was up another 4-5% today. Raymond was another good result reaction coming in. And the staffing space has gotten very excited after the Quest Corp deal. So Team Lease put on about a 10% as well. Finally, coming to some losers, PC Jeweler was a bit of a phenomena towards the end of trade, 15-16% down on that stock. Lemon Tree and a couple of hotel stocks that have rallied off late were cooling off, as were the logistics names after the big rally yesterday. And of course, Lata, you mentioned real estate, so the likes of DB Realty and a lot of the other Mumbai peers were also up and about.
Fair point. But let's check out what happens to the indices itself. First to you, Mitesh. Thank you for joining us again. But, you know, 10,550, I thought all of you technical gurus were telling us would be the lower bound. We didn't fall that much either, even if we have ended south of 10,600. So does this become buy on dips now, or is this a shorting market?
Yeah, good evening, Lata. I think my belief still is that this is more of a buy on dips market, though what is happening is that precisely after having rallied from about sub 10,000 levels to about 10,600, 620 zone, the index hasn't shown requisite strength to get past those levels decisively. So I think, you know, it's also a factor of the fact it's also a factor that there's some kind of strong supply over there, but also is the fact that, you know, we've had a rally which was non-stop of about 600, 650 points. So I think there could be a breather, but broadly I think as long as 10,480, 500 support zone is not being violated, this remains more of a buy on dips market. Tactically, you might want to take some profits around the 10,600 mark, but I think around 10,500, which is only 100 point lower, I think I would be an aggressive buyer with a 30-40 point kind of a stop loss on the Nifty. Eventually, I expect this consolidation to break on the upside.
Okay, all right, that's a market call. Let's move to the second headline. The Nifty Bank slipped almost 1% today as the rupee weakened to a 14-month low, and the 10-year Treasury yield spiked to 3% in the US. Of course, back home for us, the yield was well above 7.7%. Now, this is the biggest intraday fall that we've seen in the Indian currency in the last 2 months. The rupee hit a level of 66.75 against the dollar today. In fact, went on to trade even to the 80 level in intraday action. On that note, let's get a take in from Lata. Lata, you know, how is the market reading this sort of movement that we are seeing? Is it entirely global in nature?
Well, it didn't begin that way. We had our own problems about 2 weeks back, or maybe a month back. The rupee has been falling from 65.10 to about maybe 66.10, thereabouts. We were falling because of our own problems. The crude level going to almost 75, and our trade deficit for March coming rather badly. I mean, almost $14 billion, something the market was not prepared for. Exports are not picking up in spite of our destination countries doing very well on the global growth chart. So that was a worry. But today it was quite clearly a dollar strength story. So all EM currencies fell, and because we were a country with a current account deficit, we fell more than others. But it does appear, I mean, the Reserve Bank is believed to have been around the 66.82 mark thereabouts, but looks like they've given up. And towards the end, the dollar became as expensive as 66.90. But dealers say that most of the negatives seem to be in the price at 66.90. Unless, you know, you find dollar strengthening even more, you know, going beyond 93, or crude itself going once again towards 75. At the moment, it looks like negatives are priced in, and bond markets as well. Bond markets are completely broken. So no matter what happens, I don't think see yields falling much below 7.7%.
Okay, so elevated levels continuing for yields in India and around the world. Let's get to some questions that we're getting on Twitter then. The first one is from DM Rajan. He has 3,000 shares of IDFC Bank at a price of 54 a piece. He's asking what is the outlook from here. He's willing to hold on for 3 years. Deepan, let me toss this to you. I mean, IDFC Bank, is there any reason to hold for 3 years?
Yes, and there's only one reason, that is Capital First. So when IDFC Bank and Capital First get merged and Mr. Vaidyanathan takes over as CEO, you're going to see a completely new picture being played out over there. And IDFC Bank, which has been a laggard, I think can be a serious turnaround story over here. The ratio also is in favor of the Capital First investors, so maybe you could consider doing a switch depending upon the opportunity from IDFC Bank to a Capital First. But I think that going forward, I think give them a couple of quarters to get the rhythm going and to get the benefits of synergy going through. But thereafter, I think you could see the bank performing exceedingly well, along with Capital First, which has got a very strong retail franchise and very, very strong in SME lending as well. So I think it's not worth selling IDFC Bank at this point of time. Wait for the merger, be a little patient for a quarter or two, and you will see the numbers coming through, I think in 6 months from the time the merger has been actually consummated.
All right. Fair point. I'm not sure the chartist will agree with you at the moment, Deepan. But then you're speaking of a fundamental flip. And the viewer also is willing to wait a long while. So I won't look for a trading view at this juncture. Let's move to the next question. This tweet has come to us from Kishore Thakur. And Kishore Thakur has 200 shares of Axis Bank, which he has purchased at 350 rupees each. He has not mentioned the time period, but he's asking whether he should hold or sell. Let me get both a long and a short-term view, but it's just going to be a little dicey because Axis Bank results are tomorrow, and I think the stock will take some fundamental cues after the results. But what is the near-term telling you, Deepan, Axis Bank?
See, our preference has been for the retail lenders in the private sector banking space, and then if you still have allocation available in your portfolio, then it's better to go for the NBFC. So I think that Axis Bank can be given a pass at this point of time. And even if the investors holding at Axis Bank, depending upon how the result is tomorrow, because it could be a good result given the base effect and considering a lot of negative news flow has already taken place. So you could have a trading bounce post the result. I think that could be a good opportunity to exit out of Axis Bank. The clear favorites in the banking space do remain HDFC, Kotak, IndusInd Bank and Yes Bank to a large extent, where the balance sheet quality is far better than Axis Bank, and where the overall growth rates, be it net interest income or the fee-based income, is far better and superior to what Axis Bank has got. Now we are entering into Axis Bank uncertainty as far as the top leadership also is concerned. So I would say hold on to Axis Bank at this point of time. There are better banks available in the private sector banking space.
Okay, Mitesh, your thoughts? When he got in at 350, so it's actually in the money. What would you advise?
Yeah, so I think the good part is that his buying price is much lower, and while the stock has clearly underperformed the rest of the pack, I think from a trading point of view, if you see, the stock has been doing a range of roughly about 485, 480 on the downside to about 545, 550 on the upside. So maybe once we head towards the upper end of the trading range, I think that's a good time to take an exit and possibly shift into an outperforming bank.
Okay, fair point. With that, we go over to the third headline of the day. Tech stocks remained outperformers in an otherwise weak market. The IT index was up over 1% on a weak rupee, led by stocks like TCS and HCL Tech. Although IT major Wipro reported a weak set of numbers for the fourth quarter. The numbers came in after market hours. The company gave a weak guidance as well, at a time when actually industry peers are talking about acceleration in growth. Let's just listen in to what the management had to say.
We see good deal wins across the board, primarily through digital. From verticals perspective, whether it is the healthcare vertical, the BFSI vertical, we do continue to see some softness in consumer and telecom, which continues. Once we take some of these impacts that we've had in Q1, that is how our confidence in terms of continuing our growth trajectory in Q2 and going forward.
All right. That was one slice of what the management had to say, but it's weak guidance, so looks like Wipro will react negatively tomorrow. A big miss is what analysts had to say. Kumar has tweeted to us from Mangalore. He says he has 48 shares of Wipro, which he purchased at 225 rupees a piece, and he's asking for long-term as well as short-term advice. So first to you, Mitesh, short-term advice on Wipro?
See, in the short term also this stock has been underperforming, and my sense is that getting past 325, 330 would be a tough ask for the stock, while even if you look at the long-term charts of HCL Tech and TCS, I think it shows significant upside possibilities over the next few months. So I think it's the clear switch, shift to TCS or HCL Tech. Between the two, I think any of them is good for Wipro.
Okay, Deepan, specifically on Wipro, and this is a company that's not been underperforming its peers for a few quarters. It's a story of a few years. Your thoughts on the numbers?
I don't think it's going to change. I think it'll remain an underperformer, and you may have a trading bounce because sentiment in software generally is good. But I continue to maintain that medium term there is no visibility as far as the earnings growth is concerned for the sector. And on the whole, I think we still remain negative on most IT companies. There could be a few outliers in the mid-cap space, but that's where I think investors need to be in rather than large-cap IT, which is struggling with the base effect and a lot of a large proportion of traditional IT services within their revenues. So I would say give Wipro a pass. There may be better opportunities in the mid-cap IT, but overall our view on the IT sector still remains negative.
Okay, gentlemen, do stay on. We have to take a break, but our experts will stay with us and answer all your stock questions. We're back in a jiffy.
Welcome back. You're with Markets Today Talk Back. Let's quickly talk about the next headline that we are tracking for you this evening. It was a mixed day for the Bharti twins. Bharti Airtel surged over 3% on the back of a stay on TRAI's predatory pricing order and, of course, the good fourth quarter numbers, while Infratel was subdued in trade by over 1% after the news of its merger with Indus Towers. Let's bring in Reema to explain this merger.
One of the big movers of today, a couple of factors are aiding the optimism. One, the Q4 numbers. They reported a profit versus expectations of a loss. The consolidated margins looking better than expectations on the back of an Africa beat, though the India wireless financials continue to remain challenging, with the EBIT for the India mobile business coming in at a loss of 482 crore and the average revenue per user also declining by 6%. But the volume metrics, whether it's voice or data, continue to look very strong for the India wireless business, and therein lies the optimism from the analysts. DB says that the stock offers a valuation upside when the sector revenues recover. But the bigger trigger could be the TDSAT ruling, which has provided relief to large players like Bharti, Idea and Vodafone. TDSAT has put an interim relief on the TRAI order, which had penalized operators for segmented offers, and they'd also, the TRAI had changed the definition of a significant market player when they were assessing whether an operator was using predatory pricing. Now, that definition of an SMP or significant market player was seen as pro-Jio and anti-Bharti, Idea and Vodafone. Because there is an interim stay on that TRAI definition of SMP, there is some relief coming in for the operators. And thirdly, on account of this mega merger between Infratel as well as Indus, Bharti's share in the combined entity will be 37%, and the company will look to monetize that stake in the combined entity by selling it to private equity players in the future. And remember, the stock has been an underperformer, down 20% in 2018, so it's recovered and bounced back from depressed levels.
Oh, that's all that we want to know about Bharti Airtel. Thank you very much, and we straight away go to Avinderjit Singh, who has tweeted to us that he has 230 shares of Bharti Airtel. He bought them at a price of 280 as a long-term investor. Wants to know if he should hold. Deepan?
No, I'm not that optimistic on Bharti also. I think there's disruption taking place in the telecom industry. And one thought that the price cuts with Jio was engaging to gain the subscribers, that would come to an end. And therefore, we had a rally in telecom stocks. But I think that entire process and the entire trend still continues. And it's an industry where the only way to retain a customer is cutting the price of the service. So it's not a great business to be in per se. So I would say just exit out of all telecom stocks and look for other great consumption-oriented stocks which are there. Could be automobiles, could be in retail, aviation. I think there are many opportunities in the market right now, and not going for something like a Bharti Airtel, which is shrouded with so much of uncertainty as far as the kind of pricing pressure in the industry is concerned. So I would say exit Bharti, look for other greener pastures.
Sure.
All right. Well, let's move to the last headline of the day. It was a good day for Mumbai real estate companies. Stocks were buzzing around ahead of the announcement of the city's development plan. They saw some profit taking towards the close. But let's get you more details. This development blueprint will pave the way for the maximum city to have more land available for building houses and commercial spaces. Sonal Bhutra is joining in with more details. What does the plan entail, Sonal?
guess it's a very positive and important development for the Mumbai real estate market. Not so good for the citizens as a whole, but yes, for the real estate companies, definitely positive. In terms of FSI, that is Floor Space Index, for commercial buildings, it has been increased to 5 versus 2.66 earlier. And that means for the likes of Indiabulls Real Estate, it will be very important because they have a huge commercial portfolio in Mumbai. And now they'll be able to almost double the height of their buildings. In terms of residential, the FSI has been increased to 3 versus 1.33 earlier. 3 is for the Island City and 2.6 is for the suburban areas. Then the likes of Oberoi Realty, Suntech, Kolte Patil will be in focus because they have a huge chunk of residential buildings in this city, and that's why the focus will be there on these companies. Now, all provisions of this new FSI will be applicable to ongoing as well as new projects. However, the deadline has not been yet decided. That is something that we'll have to keep an eye on. But when I spoke to the experts, it was told to me that this came in light 2 months back when the draft regulations were out, and that's when the companies started registering it, considering that the FSI is 3. So that is one thing that we really need to take care of and see whether the projects have been developed basis taking FSI as the Mark 3. Apart from that, 330 hectares of salt pan will also come under affordable housing. There is a lot of thrust given to affordable housing. 21 hectares of no development zone, that was the blocked area, will also come under affordable housing. So the likes of Arihant Superstructures, which have a huge portfolio under affordable housing, will be under focus, and that is quite positive for them. Now, they also say that they have special provisions to construct around 10 lakh houses under affordable housing. So basically, they are actually providing more houses under, they are making houses more affordable, and that's why real estate companies will be in focus.
Okay, thanks for giving us those details. Bishal has tweeted to us that he has DB Realty shares. He has 1900 shares bought at 54 rupees. He wants a short-term view. So, Mitesh.
So I think the stock has done well in the last few weeks. If you see the stock price movement, I think it's got into some kind of an uptrend. I would say if it's a short-term view, you have a stop loss around 58 near to your price and hold. I think 85 is the area where the stock peaked out in January. I think those levels should be revisited, maybe even higher levels, but at least you can take a fresh call there.
Okay, gentlemen, we have completely out of time. Mitesh and Deepan, thank you very much for joining us, and thank you all for joining us in this edition of Markets Today Talk Back.